Time for business news now then on the programme. We're starting with yet another chapter. How many chapters can there be in the US-China trade saga as an American delegation has landed in Beijing for a new round of talks, and Brian Quinn is here to tell us any hope of a breakthrough so we can finally stop talking about this, Brian?
It's not the final chapter, Stuart.
Of course not.
There will be a few more. Of course, we know last month's round in Washington ending without a deal. The world's top two economies meeting once again to try and head off an escalation in their year-long trade dispute. Well, Monday it marks the start of lower-level talks. Thursday, we'll see Chief U.S. Trade Rep Robert Lighthizer and Treasury Secretary Steve Mnuchin take over for the main event. Washington and Beijing both keen to strike a lasting trade deal before a 90-day truce expires on March 1st. That's when U.S. tariffs on $200 billion worth of Chinese imports are scheduled to rise from 10% up to 25%. Both sides are expressing optimism, but also admitting there's a long way to go before a deal, as the U.S. is seeking major changes to Chinese business practices like intellectual property theft and market barriers. Well, investors, of course, are keeping a close eye on those talks. Asian equities markets stayed mostly positive Monday as Chinese indexes came back from a week-long holiday. Hong Kong's Hang Seng finishing the day up around 0.2% as shares in tech giant Tencent gained there. Shanghai Composite ending the day up around 1.33%. The Caspian Seoul making a bit of headway despite Samsung shares losing ground. Tokyo Stock Exchange was closed Monday. European indexes opening mixed. London's FTSE 100 and the CAC 40 here in Paris up on either side of 0.5% as we see the Frankfurt DAX losing just over 1% at the open. Last week's veto by the EU's competition watchdog of a planned merger between French rail company Alstom and Germany's Siemens has sparked a wave of protest from business and political leaders. Many say European companies need to consolidate in order to compete with Chinese and American industrial giants. But some EU firms whose mergers have been denied are holding up just fine. Georgina Robertson takes a closer look.
Derailed. The mega merger between the French giant Alstom and German giant Siemens was a bad deal for passengers, according to the European Commission, as it would have resulted in higher prices for the signalling systems that keep the trains safe. The announcement was followed by calls for changes to European competition rules.
Over the
past few years, the group Pechiney has disappeared after its merger was blocked. We've seen the breakup of Alcatel-Alstom, Alcatel submerged into Nokia, and Alstom General Electric. Every time we wanted to fight for European champions, we couldn't even form them, as the priority was competition at the heart of Europe.
Some blocked mergers have gone on to create solid, separate companies. In 2001, the Commission refused the merger of two electric giants, Schneider and Legrand. Today, both companies are successful in their own right. Their revenues for 2017, nearly 25 billion euros for Schneider and over 5 billion for Legrand.
If we want our European companies to be competitive against their US, Chinese or other counterparts, they need to innovate as we have higher production costs. It's simply part of our development. By innovating, we can be the best. Monopolies do not innovate.
However, refusing a merger is exceptional. In 10 years, Brussels has only quashed 7 mergers, but has supported over 3,000.
Well, next, France and Australia have just signed a major submarine contract. France's defense minister traveled to Canberra to ink the accord following 2 years of wrangling over one of the world's most lucrative defense deals. French shipbuilder Naval Group picked to deliver a fleet of 12 new submarines to the Australian Navy for around 34 billion euros. The subs will be delivered between 2030 and 2050, creating up to 3,000 jobs in Australia and around 500 here in France. Final contracts were delayed due to reports of cost blowouts and production delays. Here's French Defense Minister Florence Parly.
It takes a lot of confidence for Australia to bet on France, and a lot of confidence too for France to share with Australia a capability that is so close to the core of our sovereignty and our strategic autonomy, and the result of immense investments over decades.
Well, finally for business, Airbnb may be feeling a little less hospitality from one of its key markets. The city of Paris is suing the short-term rental site for illegal advertisement. Under French law, Parisian homeowners can rent out their apartments for a maximum of 120 days per year with a registration number to help the local government keep track. Paris Mayor Anne Hidalgo says Airbnb published listings for over 1,000 rentals that didn't follow that law. Such postings can carry a fine of 12,500 euros each, which means Airbnb could be on the hook for a 12.5 million euro fine. France is Airbnb's second largest market after the United States, with some 65,000 homes listed in Paris alone. A lot of Airbnbs here, Stuart.
Yeah, there could be quite a fine as well, couldn't it, by the sound of it?
I think we have the money.
Nasty stuff. Aaron Quinn with the business news on France 24. Thanks very much. Going to go